Hello everyone, and welcome to this edition of Insurance Talk. Today let's talk about home insurance and the difference between home reconstruction costs and market costs. But first, let me explain the process insurance companies use to determine the value of your home. Now, when you purchase home insurance, the insurance company will need to determine the reconstruction cost, which is the cost to completely rebuild your home from the ground up. Now, there are two things to remember about this process. First, each insurance company will use their own reconstruction cost evaluator. Therefore, estimates will vary per company. Second, the older the home is, the more it will cost to rebuild. For example, if your home was built between 1920 and 1960, the materials and processes used are more expensive today. So let me bring this home. Reconstruction cost is the cost the insurance company will pay to totally rebuild your home. Market value is the cost someone is willing to pay for your home, which is most likely determined by a home appraisal. The two costs can be higher or lower depending on the situation and location. For example, if there's a low inventory of homes, i.e. a seller's market, or the home is in an exclusive area, the home's market value may be higher than reconstruction cost. But in the majority of cases, reconstruction costs will be greater than market cost. For example, sometimes clients get confused when the insurance reconstruction cost is $400K, but they only paid $200K of market cost for the home. However, if this situation occurs where the market cost is higher, simply ask your agent for the extended replacement coverage, which will increase the reconstruction cost. So there you have it, folks. Now, if this content was helpful, please feel free to share, like, and comment, and subscribe to our YouTube channel. And if you're looking for insurance or you think you're paying too much, as always, call Jay today. Thanks for listening.